Good morning, traders. Richard here doing a quick Ichimoku Cloud Chart market review of the Nasdaq 100 index. And we'll start off with the quarterly performance. So far, it's been a strong start to the year. The Nasdaq is up about 12%. But the thing to keep in mind is the equal weighted Nasdaq is up about 7%. So there's a slight disparity between the equal weighted and the large cap tech stocks in the Nasdaq 100. So they've really been driving the rally. It's been mostly a month of consolidation in March, as we can see, but there's so far a very good start to the year. If we go back, look at end of October, beginning November, very strong performance in the market. Both the Nasdaq and the Nasdaq Composite still tracking each other closely there, but you can see the disparity in the market with the equal weighted index falling far behind. So it's a large cap concentrated rally in the large cap tech in the Nasdaq, and therein lies some of the consolidation risk. Looking back 1 year, you can also see the disparity becoming much more clearer there between the equal weighted and the Nasdaq 100. And if we go back 2 years to 5 years, we can still see the additional risk in the market consolidating back now, a little bit extended there in the large cap tech players. So a little bit of FOMO in the market, this whole rally driven by AI and the euphoria surrounding that, with the equal weighted and the Nasdaq Composite lagging the overall performance of the Nasdaq 100. But let's dive straight into the Ichimoku Cloud. We can see since the October low year, we had a very strong rally, nice cloud cross there that turned the Nasdaq 100 chart to bullish on the daily, and then we just kept on had a nice rally with key swing trade entry points at this turning line and standard line retracement. There's another situation where the standard line became a good support zone, and now consolidating for most of March. Will be interesting to see if we're going to consolidate further to the top end of the front end of the cloud here, with the downside risk to the bottom end of the cloud there at 17.4 roughly, and that is also a 23.6% Fibonacci retracement. So that can be kind of a normal pullback in the market if the downside consolidation risk continues, if it fails to rebound from the top end of the front end of the cloud support. So the key levels to watch out for on the daily is this top end front cloud support zone for a potential rebound there, and if the support fails there, then we're looking at possible consolidation back down to the bottom end of the cloud. Turning to the weekly, yeah, you can see a little bit extended from the top in the cloud, struggling to advance now since it's now consolidating within the March time frame beyond end of Q1, and there's downside risk to that 23% Fibonacci retracement, which will bring us roughly close to the top end of the front end of the weekly cloud. So that's the downside risk level to watch out for on the weekly Ichimoku. But so far still up, a strong uptrend, price actions above the cloud. So that's bullish, just looking for medium term, short to medium term swing trade rebounds to pick the index up at slightly cheaper levels. More intraday, and there we go. You can see how the top end of the cloud here becomes key swing trade support zones in the index there as well, and is now fighting for support at the top end of the cloud, with the bottom end of the cloud here, this 1811 4 as a major support zone on the 4-hour cloud. Now, as long as the price action is above the top end of the cloud here, that is bullish. Any price action below the cloud will change the outlook to bearish on the 4-hour. But so far, so good. Still bullish on the 4-hour. Still bullish on the daily. If the market closes, trades below the bottom end of the cloud, that will enter bear market territory. So far, so good. Very strong uptrend. And it would appear that we are completing a much larger upward continuation pattern. If you look at this move projected on top of that move, it would appear that we are getting close to the completion of that particular pattern. So there's a fair bit of price symmetry in the market, and we can expect some form of consolidation after this very strong rally. So watch out for those key support zones, rebound from these key support zones, both the front end of the cloud as well as this standard line of the cloud. It's fighting for support there. If support holds, we'll keep going higher. If support fails, we're going to test the top end of the cloud as well as this standard line zone there, 18114, And in a very weak consolidating market, there's downside risk to the 17,326 Fibonacci retracement zone. Until next time, happy cloud chart trading. Bye for now.